What is IRS Form 1099-A? Who files it? And what are the deadlines? If you want to know the answer to these questions and more, keep watching. We're eForms, your go-to destination for simplifying immigration, business, legal, taxes, and more. To get started filling out your own 1099-A, click the link in the description below. What is Form 1099-A? Form 1099-A is a document used when someone loses a property that was used as collateral for a loan. It's typically related to situations like foreclosure, when a borrower gives up a property to the lender because they can no longer pay the mortgage. For example, let's say you bought a house with a mortgage, but due to financial difficulties, you couldn't keep up with the payments. If the lender takes back the house because of this, they will send you a 1099-A. This document shows the value of the property they took back and the remaining loan that you owed. You'll need it come tax season because it might affect your taxes related to the property loss or any remaining debt after the foreclosure. Under what circumstances is a 1099-A required? When a lender acquires interest in real property such as real estate due to a borrower defaulting on the loan, when a lender acquires interest in personal property like a car or boat, used partly or fully by the borrower for business or investment purposes, when a lender has reason to believe the borrower has or plans to permanently discard the property from use, if the lender expects to commence a foreclosure, execution, or similar sale within 3 months of the date the property was abandoned. A 1099-A is not required in the following situations: if the tangible property acquired by the lender was exclusively used for the borrower's personal use, if the property is located outside of the United States or the borrower is an exempt foreign person, if the lender forgives a debt of $600 or more in connection with the foreclosure or abandonment, they must file a 1099-C instead. What are the deadlines for filing? If filing on paper, lenders must submit the 1099-A to the IRS by February 28th of the year after the property was foreclosed or abandoned. If filing electronically, it must be filed by March 31st. The issuer must also send a copy of the 1099-A to the borrower by January 31st. What's the difference between a 1099-C and a 1099-A? Form 1099-A deals with the transfer of property back to the lender, while Form 1099-C deals with forgiven or canceled debts. Both can have tax implications, so it's important to understand how they affect your taxes if you receive either of these forms. Lastly, let's talk about personal taxes. What information from a 1099-A should be reported on your taxes? Any capital gain or loss from the sale of the foreclosure property must be included on your tax return. This is calculated easily by subtracting the purchase price from the fair market value of the property at the time of foreclosure. If you're ready to start filling out your own 1099-A, click the link in the description below. There, you'll find detailed steps on how to fill out the form as well as an official download for you to use. We're eForms, the #1 source for legal templates online. Thanks for watching, and be sure to subscribe for more helpful videos on taxes, business, and more.